Welcome to the Valuation Analysis page on Stockoscope, the third dimension of the 5D framework. This page helps you estimate what a stock is truly worth using intrinsic value models, and compare that against valuation multiples. Let's walk through each section. We're using Apple as our example, but everything you learn here applies to any stock on the platform. At the top, the Valuation Assessment scorecard shows the overall verdict. It pairs the intrinsic value from the primary model with fair values implied by sector peers across a range of valuation multiples. At a glance, you can see whether the stock appears undervalued, fairly valued, or overvalued against both its own fundamentals and its peers. Below the scorecard sits the intrinsic value section. The platform automatically picks the right model for each company. Most stocks use a discounted cash flow or DCF model, and that's the primary engine shown full width here. It opens with the fair value and assumptions section. On one side, the estimated fair value per share, the current price, the implied upside or downside, and a valuation status. On the other, the assumptions behind that number, which you can adjust yourself. Move the initial growth rate to model optimistic or conservative scenarios. Tune the terminal growth rate or change the discount rate to reflect your required return, and the fair value updates live as you drag each slider. The cash flow projection section charts the story behind that number, the projected revenue path year by year, and the free cash flows the company is expected to generate alongside their present values, discounted back to today. For the full workings, expand Model Details. It opens with the cost of capital and growth assumptions, including how the weighted average cost of capital is built. Then the year-by-year projections and the present value bridge. Then a sensitivity analysis showing how the fair value shifts across a range of discount rate and terminal growth combinations. And finally, a plain English explainer of how the model works. For banks, insurers, and other financial companies, a traditional DCF doesn't fit, so the platform uses an excess return model, also known as residual income. Instead of forecasting free cash flow, it starts from the company's book value and adds the value created when it earns a return on equity above its cost of equity. The key inputs you can customize are return on equity, cost of equity, and the terminal growth rate, and the model shows how the book value floor plus that capitalized excess return add up to intrinsic value. For stable, dividend-led companies such as utilities, the platform uses a dividend discount model or DDM. This values the stock from its expected future dividends, the dividend growth rate, and your required rate of return. You can use a Gordon growth version for steady dividends, or a multi-stage version for companies whose growth changes over time. For REITs and real estate companies, the platform switches to a funds from operations-based model. Because REITs are asset-heavy and pay out most of their cash, it values the stock from projected funds from operations, the growth rate, the payout ratio, and the cost of equity, all of which you can customize just like the other models. Below the intrinsic value section, you'll find the valuation multiples. The primary multiples are the price-to-earnings ratio, the PEG ratio, free cash flow yield, enterprise value to EBITDA, and enterprise value to free cash flow. Each card shows the current value next to the peer median, a composite score, the fair value implied by peers, and a chart of the metric's 10-year history overlaid against the sector range. A signal at the top of each card tells you whether the stock looks undervalued, fairly valued, or overvalued on that measure. Expanding the additional valuation multiples accordion reveals 5 more: price to book, price to sales, price to free cash flow, enterprise value to EBIT, and enterprise value to sales. Together with the primary set, they give you a more complete picture of how the market is pricing the stock. That covers the valuation analysis page. This is one of 5 dimensions in the 5D framework. Head over to the Quality, Peers, Analysts, or Holdings tabs to continue your analysis. Thanks for watching.